Hello everybody, Average Gamer here, or in this case I guess it would be Average Investor. Rob speaking. Hello everybody, and welcome to another video. So, I guess this will be a year-end review. Let me get my portfolio actually here all set up. There we go. So, basically a year-end review slash month of December, kind of once over. So overall, year-end review, pretty good. We had a 6.7% return in our investments when it comes to dividends. So, not bad, almost 8% just in basically cash returns, which is good. Almost $300. Very good, very good, very good. I mean, obviously, started things, basically rebooted the entire investment account back in January. So, very good in growth overall. I actually like that. Very, very good. Couple changes since the last video. I'm 99% sure. I've added several stocks. I've added in this one here, Dividend Select 15. Paid 10% at the time of purchase. Of course, 10%. Yeah, darn tootin'. Harvest Investments. This is a health-based. I think this is my health-based investment ETF that I got. So I thought, why not? I added in this life split. I believe this is a life insurance thing. I'm not going to go into too much detail, but yeah, pays 13%. When I got it, it was actually 15.6%. Because as you can see, the price has gone up quite a bit in the last couple of days, which is pretty good, which means the percentage changes. Once again, these percentages are of day as, so that way when I'm doing all my math for how much money I'm going to make at the end of the month, or months going out, I basically freeze these numbers at that specific stock. So you'll see here that I actually pay attention to how much stocks I'm buying, and on another portfolio, another spreadsheet I have the name of the stock, the exact purchase date and time, and price that it cost me, and then the percentage and the payout of that specific purchase. Because every purchase could have a different dividend percentage payout due to the fact that the percentages are based on the price. So, just a little heads up. Because basically I can see which ones are giving me a better percentage versus which ones aren't. And I can also tweak my own percentages by selling certain stocks when they get to certain prices and things like that. But I won't bother you guys with that. That's me being very nitpicky and micromanagey. Or macro? Either way, being very, very, very specific in what I'm doing. I also bought a utilities thing, a utilities ETF. Basically, it's just run by the Bank of Montreal, and it has a bunch of basically utility companies, power, aka hydro, water companies. Basically, it's a utility for a house. They own shares in it, Enbridge, things like that. I also bought these two here. So the first one is American Hotel Income. Now this is a stock that I had to pay, I think it was 17% prior to COVID. And then COVID happened. They own a bunch of hotels, Marriott's. I'm trying to remember that there's like 3 or 4 different hotels that they own, like under brand names. But it's a Canadian-based company. I think Ramada is one. I can't remember. But anyways, they paid it ridiculously when it came to everything because they were making a lot of money. Basically, they're charging people rent. Very, very, very good business. Numbers were amazing. COVID happened. They just shut down basically no one was traveling, so no one was using hotels anymore. So basically, they stopped paying their dividend. And of course, the stock also dropped from about $11, what it was before, to what it is we're sitting at right now, which is about 3 and change. They just recently announced they're going to start paying out their dividend. I forgot to turn off. 1 second. Let's turn off my screensaver. There we go. Yeah, so they're going to start paying out a dividend, they said, in Q2. And it's going to be a monthly dividend of 2 cents. So it'll start off at 6%. If it's any indicator as to what they have before, it should go up pretty quickly. We'll see. And then I also got a Bitcoin ETF that also pays a dividend. They pay 10 cents per month. So it's currently 13%. It's actually one of my more higher ETFs. So right now, what is going on for all these things? Well, as you can see, pretty much when it comes to our P&L, or profit and loss, there's only 2 stocks we've actually lost money on in the last year. We lost 89 cents on Newport Exploration, even though they pay more of that in a dividend every 3 months. So not too concerned there. Basically, when they pay me out cash money in 3 months, in January, February, March, I'll make up that plus some, because I'll still be buying more stock anyways from them, because they pay 17% right now. The other one is the new ETF that I got. I got that actually the Friday before Christmas, so New Year's Eve. So that's no big deal. I bought it and it immediately went down 1 cent. Actually, it went up to 9.11, and then I was like, hey, I'm making money off this thing already. Pretty good, because usually short term, when you first buy a stock, you're ebb and flow whether you're going to make money for it or not. Long term, the plan is to make money from it, especially with these long term dividend investments. I wasn't looking to buy and flip, right? So I was like, hey, I'm already making money off of this. This is pretty awesome. And then I went and looked at the markets afterwards. I'm like, oh, I lost 5 cents. But yeah, so there we go. So overall, we're looking for total dividends here. Yeah, almost $300. Well, I'll say 270 to be more specific, with a 6.7%. I call this a cash return. This is the exact amount of cash that we received back in regards to how much I put in. So I think that's pretty good, or what the current value is. So this also will fluctuate a little bit. So you'll see that my ROI here, it's based off of, M2, which is this right here. So this is the actual value of the stock. So I'm not going to look at this, because this is actually how much it's cost me. With dollar cost averaging, obviously I'm going to reduce the price of the dividend that paid out at the end of the month. So overall, pretty good. Up $419.76 on the year. Pretty good. This number, obviously, I'm not going to change. It's not going to be, hey, this is what the number... I might take a screenshot and do like, hey, year 1 dividend. And then down here, put in, hey, this is what, year end, this is what it looked like. I might do something like that. I'm actually thinking of doing something like that. I'm also going to delete this column. That shouldn't be there. But yeah, so far so good. Now, I know I told people I wasn't going to get into crypto. Didn't want to get into crypto, but I kind of have. I've been doing a little mining here and there, making it's $120 in Bitcoin a month in mining. Nothing too crazy, but I recently found a crypto that pays the value of crypto at 10%, basically a crypto dividend, if you would. Basically, you say, I own this, and as long as you say you own it, you earn 10%. It's basically like passive mining, is another way of putting it. So basically, I found something that pays 10%. So right now, I've got around I originally had around $10.36 worth of Ethereum. It's currently sitting at $11.44 worth of value. To me, that's no big deal. I have no Bitcoin right now because I moved it over into my Cosmos and aka Atom Coin, the one that pays the 10% in the Ethereum. So right now, annually, I'll be earning around $10 if I keep my current amount there. I'll be earning almost $10 worth of the Atom Coin or Cosmos Coin. Right now, I'm up $8.11. Just because I got it at when it was like 30 some odd bucks. Actually, it's right now. It's at 30. Actually, hold on. Is that even right? Yeah, 34.74 right now. Not bad. Some of it I got for free. I think it was the free amount that's kind of tipped me over a little bit. But I think I'm technically only up like $2-3 because I think I got around $5 in free Atom coins. So there you go. But yeah, so that is the overall how's she doing for this year. Still have like I think I still have LBS to pay off this month, or pay in this month. We still have Life Bank to pay in this month. We still have Aberdeen Asia Pacific Income Fund to pay up this month. Not expecting anything from American Hotel or the ETF, the Bitcoin ETF. Not expecting anything from. Oh, that's right. Life Split Corp. Not expecting anything from them this month as well. I bought them all at the beginning of the month, so unless I happen to buy, because I bought them right at the beginning of the month, if I lucked out and got them just before the ex-dividend date, we'll see. But overall, yeah, we're going to go into a little bit more in depth for those of you who are interested in the overall holdings. So these are the overall holdings themselves that I have. Shows how much the actual overall returns are and all that stuff. So you'll see here, when it comes to actual year-end returns, only one company is in the negative. That's Newport Exploration at minus 2.8%. Pretty good. Pretty good. And they pay also 18% in dividend or whatever it was. 17.3. So I'm not worried. I'll make up that and I only hold $73 and they pay $2 a month. It's pretty funny. Overall, when it comes to returns, capital gains, we've earned $223 in capital gains, and overall dividend income is $273.32. That's not 100% correct, you'll notice. That's because some of these companies don't report on Simply Wall Street, so this number will obviously be a lot different. But overall, $496.42 as a total ROI, or aka 12%. And we're looking at right now, I'm calculating 419. It's saying 496. It's because there is a catch-22 with a couple of these stocks where I bought them and I was being charged to buy and sell them. So I, unfortunately, in this list here, include that cost to buy, unfortunately. So yeah. So unfortunately, I kind of got whooped a little bit. Yeah. So overall, we're looking at 12% return. Scroll down here a little bit, so you can see here. Ignore this big thing here because this is a error somehow. I don't know where this is going and why this is reporting that this dividend this was $1,500 on the 16th, but yeah, I believe they did a freeze on the trade. But yeah, so you can see, pretty good. Everything's just slowly going up. Obviously, I'd like to go up even faster and higher, but it won't. Overall, nothing's got a major control over overall when it comes to our returns. Now, yeah, Slate Grocery definitely is our number one return right now. You don't want to see, where is it? Like right here. HHL is in the red because, we've only gained $1 on it. And NWX, because we've lost $3.68 technically. Overall, the diversification, I think it's pretty good. This unfortunately doesn't break it down too much into detail. I kind of wish it broke it into detail a little bit more. But some of the companies, yet again, that I'm in, they're ETFs or things like that, and they really don't have the information on here, unfortunately. Overall, undervalued, which this is actually something I'm really interested in and happy about. Oh, you can kind of see my green screen here a little bit. Undervalued. So right now, the overall portfolio is undervalued by 50%. That means that my overall portfolio is sitting at $4,000, should be sitting at $6,000, which actually makes complete sense when it comes to things like COVID. So there you go. P&E is pretty good. Price associated with growth, nice and good there. You can actually see overall our future is okay. We're not too worried about past. Our health is pretty good. Very good value and good dividend rates. Overall growth versus future growth for everything, we're looking at a future average of 15.9% for the businesses. We're not too worried about the past average because of COVID in the last couple of years, but we're looking at some good information. So there's just more information on the growth. Now this you can ignore because yet again a lot of the information not properly communicated. But overall, dividends. You see, not everyone. We got 19 investments, and only 3, 6, 7, 8, 9, 10, 11, 12, 13 are on here. And even of that, not all of them are included in all the different reports because they just don't have the information. This is a company based out of Australia that I use. Because here we actually have on our end a 11.6 average annual yield. So overall, pretty good. Just once again, December was really good. The year overall was pretty good. Obviously, being year one. Year two, I'm hoping, fingers crossed, that we can get this number right here to at least double. I want to double the amount of money we're making. Right now, some months we're up $1, some months we're up a couple bucks. I'm thinking maybe I'm going to end up with maybe 50% additional to this. So if we look at, say, 270, and what's half of 270 real quick? 270 divided by 2. If it's up another $135, I'll be happy with that. At the end of the year next year, as long as this number here is higher, as long as we get a bigger return rate, that just by default means this number should be higher. So we'll see. Fingers crossed. We'll see. What I will be doing too is with my crypto. Over time, what I do is usually, as I said, I make about $120 in Bitcoin. So what I usually do is I take usually about $30 because that's how much it costs me to actually produce it. Put that towards my electric bill. That brings it down to $90. So actually, I'll even show you guys with a calculator here what I do. So earn about 120. We immediately knock out $30 for electricity costs. That leaves us still with around $90 worth of Bitcoin. After that, I usually move 45% of it into our overall actual stocks. So I sell $45 worth usually, or half of what's left over. After we pay the electricity bill, half of it goes over to our investments, which leaves obviously $45. Of that $45, I usually take 20 of it and move 20 into Ethereum. And then I usually take another 20 and move it into the Atom coin. And then after that, the remaining $5 just sits in Bitcoin. And basically every month that happens, transfer, move things around, and there you go. Lose obviously a little bit of coin here and there from the transfers and these purchases. But what I do is I go from my mining to my wallet, from my wallet to the market, make my exchanges at the market and my transfers at the market, and then, or sales at the market, and then bring it back into my wallet, just to make things a lot easier for myself. So, and then usually what I'll do is I'll start tracking the value at that point, at the exact moment it hits my wallet. Because prior to that, it's all kind of going all over. And I usually use that exact moment where it's like, now I'm holding it. What was the original transferred in amount? Because usually that's the amount, because I usually do all the transfers and sales and exchanges, sales, and all that stuff, all in the same day at the end of the month, and then just move things around, and then boom, there you go. So basically in my wallet comes in the Atom coin, the Ethereum, and the Bitcoin, and then going out usually is the $45 cash plus $30 cash. 30 for electricity bill, 45 for future investments. But yeah, there we go. So I hope everyone is had a good year. It's the 28th today, so I'm not too sure when you'll see this. You might see it probably on the 30th. So Happy New Year to everybody. Have a good year next year, and don't forget to make sure you're healthy and safe and all that jazz. Thanks for watching. See you next time. Bye-bye.